Alright guys, so welcome back to my YouTube channel. My name is Ambassador Chicks. If you're seeing me for the first time, I'm a forex trader. So on today's video, I want to look at the concept of liquidity, right? A lot of people still find it difficult to understand the concept of liquidity, and on today's video, I put on the title as the power of liquidity. We need to understand that liquidity is what moves the market. First of all, when you hear liquidity, you need to understand that liquidity simply means money, right? When you see somebody say, I am liquidated, that means he has lost money, right? Once you hear liquidity in the concept of trading, that simply means money, right? When you hear something like liquidity is what moves the market, that means money is actually what moves the market. So we need to understand that institutional traders, before they take their positions, they want to hunt retail traders so that they can be able to push price in their direction. This is where liquidity comes up, right? So on today's video, I want to talk about the power of liquidity and how it can help to transform your trading. So I don't want this video to be long, so I'm going to be as much as possible to be fast. And then if paraventure is going to be long, then you know that it's going to be having part 2. So let's quickly dive into the chart. So here I have the power of liquidity, which I said institutions need liquidity to enter large positions, so they often hunt retail stop losses above resistance or below support to fill their orders. So what they do is they tend to, before they take a buy, they tend to clear sales, right? Before they take a buy, they tend to clear sales so that those people they have cleared out of the market to add to their position that they want to take, and then they push the market to the upside in their direction, right? So let's look at how liquidity actually works. So here I have a very nice chart I have already mapped out, right, using my tools, right? So many times if price is in an uptrend movement, we tend to see a push, a pullback, right? A push, a pullback. One thing you need to understand is after price have taken out a break of structure, right, without clearing liquidity, price will always come back to take out liquidity before it will continue to the actual trend direction. So if we look at this market, we see that price is currently in an uptrend move. So if we bring out our distance, we see that price is in an uptrend, right? So as price is in an uptrend, all we are looking at for is what? Opportunities to buy. But even though we are looking at opportunities to buy, you still see people that will still be losing money even though they are still trying to buy. So we are going to be understanding the concept why we tend to lose money and why after losing money, price will still go in our direction. So look at the chart. So we have price push from here, pull back, right? This pullback, the first pullback that market gives you in a trend, I see it as liquidity. In a trend, when price is pushing up, right, the first pullback that price gives you many times serves as a liquidity level. Price will always push up, probably break another structure, and based on what you have been taught in a basic market structure, you say, okay, once price has broken structure, price cannot come back here. But many times you see that price will still come back and take out that low, right, that caused the break of structure, because price have left liquidity below, right? So here we saw price push up, pull back, push up, pull back, form double bottom liquidity. So when you see price is at the same level, right, this is double bottom liquidity. So here we have money resting here. How do we have money resting here? When price pushed up and pulled back, right, there are people that started buying from here. There are people that left orders here, right? As soon as it broke another structure, right, and came back, so people started buying, and as they are buying, they are putting their stop losses below. Why are they putting their stop losses below? Because they have already assumed that price have broken structure, so price cannot come back again. So all the people that are buying from here, their stop losses are somewhere here, something like this. We have something like this. As they are buying from here, their stop loss is very below here, and they are targeting that high, right, the next liquidity level. So this could be their target, right? This could be their target. And I know you must have experienced this. You were in a trade, price came, tap you in, and very close to your TP, price now came back, and only for you to check your chart and see that price almost got your TP, retrace and hit you out, and then start buying. It's very painful, but that is institutional trading, right? So we have double bottom liquidity here. So no matter what price tends to do here, for somebody like me, I can never be interested to take a trade there. I won't be interested to take any single trade here, right? Why won't I be interested to take any trade here? Because I understand the concept of what? Liquidity. So price can push up, even if it's continue to break under structure, no problem. I will patiently wait for price here, right? So as soon as price comes back, clears this liquidity. And what you need to understand again is Below this liquidity, you will see an imbalance. You will see an imbalance. Some call it fair value gap, some call it market insufficiency, whatever you want to call it, right? But you see an imbalance. That is a gap. If you don't understand what imbalance is, I'm going to be making a separate video explaining the concept of what imbalance. So you will always see that below that liquidity level is imbalance resting there, is a gap, is a space, is an insufficiency, is a fair value gap that price needs to come back to do what? To fill. So when I have that imbalance and I have that top liquidity resting above, that is a very strong confluence for me to wait for price at that level. For me to wait for price at that level. I don't know if you understand. So what happens is whenever price comes to that zone without hesitation, you can then take your trade after it have cleared the early buyers, right? The people that entered earlier, after price have taken them out, you will now join the institutions, because that's what they do. They tend to clear people out. So all those people that are selling, that are trying to push market towards the selling direction, once they hunt their stop losses, right, all those sellers will be out. Then price will not have momentum to go in buying direction, right? Then they will not add their position, and you see one aggressive long candle will just pop up and be buying, and you'll be like, wow. You know, have you discovered that many times when you're in the trade and price is going to hit your stop loss, it usually goes with strong momentum, right? That's institutional manipulation. It usually goes with strong momentum. You see that candle, it will just come out and it's pushing strong with strong momentum. So sometimes when I'm trading, when I see such, I tend to close my loss short, right? And many times 90% out of the time, you see that price will still go to hit my stop loss. But I understood how that candle pops out and how it comes up. So what I do is, if I fall a victim of it, I tend to cut my losses short instead of allowing it to clear all my losses, right? So once price then comes back to this particular zone, once price then comes back to this particular zone, that's where I will not be expecting to take a long position, my stop loss below this. So that, why will I put my stop loss below this? I'll put my stop loss below here because once price takes out that low, right? Once price takes out that low, it is a violation of market structure. Then I will know that price is actually now looking for another direction. So it's no longer in a bullish trend, but is now in a what? In a bearish trend. So if I enter here, my stop loss will be there, and my take profit is going to be that swing high that the previous person that entered the buy is still targeting, right? Many times you see that you enter the buy, price will hit you out, and then still later buy only to hit your TP. Why? Because the place you entered is called an inducement level. It's called an inducement level. An inducement level is a level that is created that looks like a perfect entry zone, right? When you enter, price tends to still take you out. That is it's called your liquidity level, right? Inducement or liquidity level, whatever you want to call it. So once price push and break structure to the upside, when we come back, you see this is another liquidity level here that price has created. Price does like it wants to go up. Why did price start retracing here? If you use your fib level and check, you discover that price got to 50% of fib level, and whenever price got to 50% of the fib level, you see some little traders are trying to buy from there, right? Because they feel 50% is a discount zone, right? So they want to continue buying from that 50%, right? So price will do like it's going to their direction, and then still come back to take them out and come back to fill the imbalance below, and then tap the other block only to continue in their direction, and they'll be like, I'm buying, price hit me out, and then continue in my direction. So here is another form of liquidity. Price can sometimes, you see price will come down, right? And then you see price forming a kind of a trend inside a trend, right? This is the swing structure. This is the swing low and the swing high. Then the swing low and the swing high, right? Inside it, you see price will start forming a bullish structure. That bullish structure that price is forming inside it is a liquidity level. Their liquidity level, right? Their liquidity level. So you will see people will mark their trend line. For trend line traders, they'll mark their trend line and they'll be waiting for price to come back to that level, touch it, and then continue to push up, right? But many times you see price will just, after price have tapped it 1, 2, 3, the next one you see aggressive push to the downside, boom, clear that liquidity level, come to fill imbalance. Remember I said price will always, one thing that will validate your liquidity is there will always be imbalance below it. There will always be imbalance below it, right? That's one thing that helps to validate, okay, yes, this liquidity level is very much valid because imbalance is below. Imbalance is, like I said earlier, is where price will always come to fill. There are gaps, there are insufficiency moves that price will come back to fill before it will continue, right? So Here is another form of liquidity. Price will push up, pull down. You think that, okay, let's buy here now. I think price have come very low, so let's buy. Price will still take it up and then come back only to take out this low. And where price tends to haunt people again here now, as soon as this low is taken out, a lot of people will say, price have changed structure to the downside, and they forgot that there is a zone here, and this zone has not been mitigated, and there is an imbalance or fair value gap or market insufficiency here, right? They forget it, and then they now want to go here only for them to look for a sell from here, because they feel like price have what shifted structure. So many times what price will do is price will come to that zone, and then you see something like this, and then the next thing price will take it out, right? So this is basically how price moves, right? This is basically how price moves. You need to understand, when you're entering your trade, you need to understand that the level by which you are entering is very, very important, especially if you are trading SMC strategy, right? You need to understand that the level by which you are entering is very, very important. For example, if you are entering from a 15 minutes order block, right? 15 minutes order block can easily be manipulated, but you see, 4 hours order block, daily order block cannot be manipulated. Do you know how much of money that will be spent to manipulate it? So that's why many times the higher time frame order block is much stronger than the lower time frame order block, right? So this basically is the power of liquidity. I know you must have been told about liquidity, but let this video help you to understand it more. Let this video help you to understand it more, that what moves this market is liquidity. This scenario is for uptrend, right? The reverse is the case. In the downtrend, is still the same thing. We need to understand this concept a lot. We really need to understand this concept. So let's flip the chart and then, all right, so this is in a downtrend, right? This is in a downtrend. You still see it's still the same thing, the power of liquidity, right? We have price here. You can see price came, broke structure to the downside, and then boom, come back. Just the same thing as it happens in higher time frame. That's the same way it happens. As it happens in buying, that's the same way it happens in what? In selling. You just need to understand this concept, right? It will help to add up your win rate. If you understand the concept of liquidity, if your win rate is 40% and you now come to understand the concept of liquidity, your win rate will increase to 60 to 70%. I'm telling you the sincere truth. So let's go to the chart and see what I have just explained. Right, let's just go to the chart. All right, so meanwhile, this is a trade I'm into on this trade, this JPY. Remember, that's a pair I trade, so I'm currently on the trade. I'm selling this pair. So this was the coordinate I called out for my inner circle community. Not really, I called out for my community, so that's it. So to join the community, the WhatsApp group, so you can see the coordinate I called out for my community, right? For them to join me the trade, and they are currently in this trade. So to join my community, you can check the description. You will see the link to the WhatsApp. Join the WhatsApp group. That's where I drop my analysis and then my entry whenever I'm taking trades. So what do we see here? We can see that in this move, let me start from here. We can see that in this move, this is a bullish market, right? Oh, sorry. All right, so what do we have here? We can see that this market is currently in a strong bullish trend, right? So here we see price sweep liquidity here. This is a sweep of liquidity, right? And then what did we see again? We see price change character to the upside, right? So the market was actually strongly bullish. Okay, let's go to daily time frame so that we can see it very more clear, very more clear. So we can see that the market is actually in a strong bullish market trend, right? So let me just mark from here. We have this low, this high, this low, this high, this low, this high, this low, this high, this low, and this high, right? We see that price is strongly breaking structure to the upside. So let's go to 4 hour time frame so that I can quickly explain. So on 4 hour time frame, this is what we have right from here. We have this break of structure here, right? That's BOS. Let me quickly put that BOS. Then we have this another break of structure here, BOS. Please pay attention, guys, please pay attention. Then we have this another break of structure here, BOS. So what are we expecting on this market? As price broke structure here, we saw price came back, right, and then did what again? Broke structure to the upside again, right? Normally, you, based on what you have already been told and based on your analysis and based on what you know, right, about market structure, price is not expected to come back to this low again, to come and take out this low again, right? Price is expected to respect this low and continue to the upside. But what do we have here? We see that price came to take out this low. Price came to take out this low. Why? Because this low is a liquidity level. This is a strong liquidity level. What did price do? First of all, when price came firstly, we see that price formed a double bottom liquidity here, just like it wants to push up, and then the next thing is an aggressive drop that cleared this liquidity level. As soon as price cleared this liquidity level, tapped on this one daily time frame order block, what did you now see? Price pushed up only to go and take out this high, only to go and take out that high. We got another break of structure there. So all the people that were trying to buy this market from here now, all of them became liquidity. You see what I said, that whenever you see price coming to hunt out liquidity level, it usually comes with aggression. That aggression is to clear everybody, to clear everything, right? So you see that all of them has become what? Liquidity. All of them has become liquidity. So that is it. That is it. When you understand the concept, it's going to really help you a lot. So right now, what am I anticipating? Price has broken structure to the upside. We are now anticipating price to come back. Then look at what I'm anticipating, right? We see price breaking structures to the upside, right, and then took out the daily swing high. So from this daily swing high that price have taken out, right, with the next thing we are expecting, just like this, after price broke structure, we started expecting a retracement. You can see the retracements happened very aggressively, and before price give us that retracement, we'll see that price will always give us a pattern of retracement. So here we have this break, and this we saw this price shift, right? This is a change of character. This is a change of character here, right? We saw this change of character, right? And then we have this order block here and this gap unmitigated. So that becomes our supply level, right? That's our supply level, because price has given us a change of character. If you go to like 1 hour time frame, you see that this is a very clean change of character. And look at here, we have this liquidity, double top liquidity. You can see we have this liquidity level here. That's a strong liquidity level, right? So what are you anticipating? Anticipating price to take out this liquidity level, fill this gap here, and then drop. That was exactly what happened. You see it. You can see the drop. Why some people are selling this from here? People who understand the concept of market structure, right? Why they are selling from here? Some other persons are trying to buy from here, and they became liquidity to those who are selling. Then the same thing is what I'm looking at here, right? You can see that as soon as price, as soon as we got this move, right? We got this change of character here. You see, as soon as price gave us this push, right, pull back, right, we got this chop, we got this change of character here, right? This is the last push, pull, this is the last pullback, and then a push. So you can see that as soon as you can see that price is pushing, breaking structures to the upside, right? So here, as soon as we see this price pushed, pulled back, right, we saw this this shift. Price took out this, and then price pushed up, left this, didn't remove the high. What happened? Price tanked down and then push up again, only to take out that low as liquidity. So people that were trying to sell, yes, they have understood that yes, price have changed structure to the downside. They understood that, and they entered their sell from here, and their stop loss were below, and price started going very nicely, and they will be very happy that price is going nicely in their direction, right? The next thing is what? Price now comes back up, only to clear them out. Still didn't take out that high, then start tanking down again, right? Then looking at this trade I took, let me show you something from this trade I took. So looking at this trade I took, right, As price broke this low again, we got another structure shift, and very nicely we can see that price built a very nice liquidity level here that we want price to take out first before we consider taking a sell. So here we have this liquidity level here. We have this liquidity level here. That's my liquidity level. And what do I have to do? As soon as I wake up this morning and check my chart, I saw price within somewhere here, right? I have to patiently leave price. I have to patiently leave. What I did was just to set my alarm, and less than 1 hour, the next thing I heard is my alarm ringing. It was now this aggressive push. So meanwhile, I already set my pending order. So I believe the alarm ringing was my pending order has been triggered. So that is it. And I'm anticipating it to tank down all the way to this. I'm expecting it to tank down all the way to this daily demand zone. So once price comes to this daily demand zone, what do I want to see again? I want to see price form, give us a sweep, a break of structure. Then we need the liquidity level to be formed, taking that liquidity level out, and then we continue to the upside, right? So this will become our liquidity level for entry, confirmation entry. This will become our liquidity level, and this will become our sweep of liquidity on. This will become our sweep of liquidity. This will become our change of character to the upside. So once we get something like this, let me quickly label that so that break of structure. Okay, sorry, change of character, and then below here is our last break of structure, right? BOS. That will be our last break of structure, but then price or our last BOS. The price swept it as liquidity and then gave us a break of structure. So this becomes our liquidity level. We'll be expecting price to engineer liquidity for us, right? Where we'll now be looking to take, once price clears that liquidity level, taps us in on a particular lower time frame demand zone. Then from there we take in our buy. I hope this really makes very much sense to you. I hope this does not waste your time, so you can see that this is how we read the concept of liquidity. I hope this video helps you so much to elevate your trading and add up to the little knowledge you already have of the market. So I remain your brother Ambassador Chooks Paul. Please do well to subscribe to my YouTube channel, turn on the notification bell so that you always get notified each time I drop my video. Remember, I drop weekly analysis and bias for the week, and then I also drop very educational content that can help you to scale up in your trading, just like we are still growing. Shalom.